My name's Harry Moore, and I'm an associate real estate broker with eXp Realty here in Montgomery County, Maryland. And today I'm going to talk about the news we've been seeing lately about what's happening in the real estate market and how that might impact things in 2022. So let's dive right in. The big news last week was that Zillow has closed its iBuying division and that it's laying off a quarter of its staff. Does that mean that they think the market's crashing? At the same time, we've seen unprecedented appreciation in many parts of the country. Interest rates have been bouncing up and down, and inventory's up over the spring in the market that seems to be cooling off a bit. So it's kind of a roller coaster ride. Before we get wrapped up in what's going on around the country, let's take a minute and remember that real estate is a hyper-local business. And even though things at the national level can certainly have an impact, many of the drivers for our market, or any real estate market, are local. When I talk to people, what most of them are concerned about is whether it's a good time to buy or sell here, locally, and should they get into the market as a buyer or a seller. Well, numbers tell us a story, so we'll dive into some of that data and see what's going on. Let's start with some good news for homeowners. National numbers show that the equity for an average homeowner rose by $51,000. If we look at the DC Metro numbers, the year-to-date appreciation was 8.4%, which comes out to be just a touch over $41,000. Now, within the DC Metro, there's a huge spread in numbers, and this gets back to what I said earlier about the local nature of real estate. So we'll take Frederick County, which was the winner so far, with 15.7% appreciation, or just over $55,000, while at the opposite end of the spectrum, Arlington County actually showed a slight decrease of 1.2%, or roughly $8,000. Montgomery County has racked up 10.4% appreciation so far this year, which equals $50,000 even. So that's the story for the past year. But what about moving forward? Well, everyone seems to agree that the overheated market of 2020 and early 2021 was a blip, and that appreciation will probably return to more normal levels over the next year or two. More in the sort of 2 to 4% annual range that we've seen historically. I think that's actually good news for everyone. An overheated market is not a healthy market in the long term. Now let's move on to the inventory question. If we look back at the early spring, there were only about 6,000 active listings in all of the DC Metro area. Now, that number has jumped up to 8,500. So the first thing to know is that March inventory levels were the lowest that they've been in the past 10 years. It's hard to believe they could have gotten any lower. Another interesting thing to note is that in 5 out of the past 10 years, September's been the month that has the highest levels of inventory. So what we're seeing isn't really that unusual. When I looked at the Montgomery County numbers, September was the high inventory month in 4 out of the past 10 years. Next, let's take a look at interest rates. Rates have been bouncing around between 2 and 3% for the past year or so, which are crazy low numbers. Here's a chart of what some of the national experts think is going to happen to interest rates in the near future. So let's say that rates move up about 0.4% over the next year. That'd translate to an extra $100 a month for a borrower who's putting 10% down on a $500,000 house. That's a good chunk of the cable bill for some people. While we're at it, let's add the appreciation number of 2 to 4% that I mentioned before into the mix. So I picked 3%. That translates to another $26,000 in sale price based on the regional average. That'd bump the payment up by a total of $218 a month for the same house. That's a potential 10% drop in buying power if you wait to buy until next year. So, how about what's going on with Zillow? I've heard lots of chatter in the real estate press over the past week. Apparently, they may take a hit of somewhere around $400 million by the time all is said and done on roughly 7,000 homes they purchased. Yikes. One of the podcasts I listened to called them the worst flipper in history, which I thought was kind of funny. They relied on their Zestimate to determine market value, and then they bet on the fact that appreciation would dig them out of a hole if they overpaid. It seems that their gamble didn't pay off, and it's tragic for the employees who will be losing their jobs just before the holidays. And Zillow's stock price took a pounding, dropping from 105 at the end of October to 66 today. We'll have to see how that plays out. One thing this shows is the importance of understanding the local real estate market and the value of having a professional evaluation of a property before you sell or buy. If you're thinking about making a move in the future and would like a professional opinion about the value of your property, feel free to reach out. You can call, text, or email me. They all work. If you'd like to see a video I did earlier that talks about a great program I have where you can trade your home in for your next one, click here. And if you'd like to subscribe to my channel so you can get updates as they come out, click over there. If you have any questions for me, my contact information is below, or you can leave a comment in the remarks. Take care and stay safe.